Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Monday, and we're sitting here now at the 11th of November, 2024. And what a day. Trump made more picks, so I believe we have now 5 members that he has picked of his team. I won't call them all cabinet members, but team. Stephen Miller was chosen, but I believe he's going to be a deputy director of policy today. I'm not convinced that that is part of the whole cabinet, but we'll find out in time. Is Elon Musk part of anything? He seems to have the president's ear on everything, so we will find that out as well. There'll be more picks, and I understand that we're going to hear who's going to be the Treasury Secretary by Friday. I'm curious who's going to be our Secretary of Defense as well, so that's going to be important, and as well as Secretary of State. So there's a lot of big names going to be coming out, and he's doing his vetting process, and we will see what he's going to do. We know that anyone that was against him, Haley, Pompeo, they're out. In other words, if you said things that weren't pro-Trump during his candidacy again, you seem to be not on that list. Amazon down a little bit today, as you can see. Tesla up another $28. I mean, this stock has just gone up, 40, 50% in no time at all. Again, the Trump candidacy. Kathy Wood's in love with it all, as she believes that now Trump will send the markets up to sites we've never seen and in quick order. Okay. You know, she's entitled to that opinion. I hope that is the case, by the way. NVIDIA, well, the tech didn't today join into this stock market rally. If you looked at all the tech stocks, they were slipping the other way. Today was more a day where some of the healthcare got a benefit. There's not going to be some takeovers in there or mergers, and I think that's probably a good thing. We're still beating up Boeing. Hasn't been able to do much. We'll see what goes on. Microsoft down a little bit and Meta down. So you're getting the idea there. Rotations for sure going on. Now, before we go into all this, because I want to talk a little bit about that, tomorrow you're going to get the National Federation of Independent Business Small Business Optimism Index. That'll come out at 5 in the morning, so I'll certainly be talking about that in the morning in my subscriber video. And the Red Book Group will come out on their retail sales at 7:55 a.m. Then we get CPI on Wednesday, PPI on Thursday. So these are going to be big, important numbers as we look at it. So you have a gap, a breakaway gap, very possibly, the secondary, and today could be called an exhaustion gap to the upside in this stock. Do I know? No. I'm just giving you what common chartists will call these things in here. And recently, you've been getting those type of plays in the market. You've had gaps here, got a few right through here, and you did exhaust eventually. So I'm just pointing out what it happens as a chartist, and I was brought up charting, so it's interesting. You've got higher lows, higher highs in the market. All right, so what does that mean? Uptrend. Where the moving averages, all way below the market. So that only leaves a Bollinger Band to be a resistance, and you've been over it now a couple of days in a row. So we'll see what happens. But more important, this is called a gorilla glue trade by me. And it means that you've gone to the band and you're either staying on it or over it, and then you pull back to it at least over 3 days in a row, and that's what you're doing right now. That is a sign of strength, not weakness. So yes, I expect pullbacks, but nothing major. I am not looking for the market back here. I think that's history now. So I think that, can you get a third pullback at some point? Very possibly. When you look, are you overbought? Yep. Have you begun embedding? Well, yes. The first day where the blue and the red number are over 80 is today. You need 3 in a row to embed, and that transfers you instantly from being overbought to saying, I've locked in a major trend and I'm going to keep running until that red line closes under 79. One way to look at it. Qualcomm, Big problem. You go from the lower band to the upper and you get thrown right on back. So that first challenge that you came into of the 200 day, the 100 and the Bollinger Band, and I teach you that here, it's often an area you want to learn to take money off the table against if you're long. Getting through that and staying over it, very hard. CrowdStrike acting better and better and better. Again, the gorilla glue trade, not embedding. There'll be a break, I think, but here's what's happened. The 18-day just crisscrossed the 200. So these averages are lining up. Remember we were down here and I was telling you, I thought you had bottomed out. All the bad news had hit into this area. You came down and you've held it. And that's been the beauty of it. I think we've been in it a few times along the way in my subscriber service. In uranium, I mentioned that we have a problem now at the 18-day average of closes simply because you are watching when Amazon got refused and we got to get people in government under Trump is probably going to happen to make uranium come alive, because this idea that you can't have these plants, or you got an existing plant and you want to get money for AI centers under him, that won't fly. He's not going to have our AI centers go abroad. You know that. So just understand the man and what it is. So I'd say if you get back over 31.78, the trade's going to get excited on the long side again. In K-Web, you know I am not impressed with what China's done, nor is the market. So it's not just me. The marketplace isn't. At any moment, you could wake up and China goes in and says, okay, we're going to do a little bit more. And the market's waiting for that. But I don't think you'll get that until December. So I expect to see pressure on the market until China meets again with these committees to decide what to do. They've had one thing that they've understood, I hope. The world is not happy with how they're going about what they're doing. And with the new situation of taxes coming on, got to wait and see. I saw an interesting gentleman today in the clothing business on CNBC, and he correctly said, I want to make this clear, that the last set of tariffs didn't mean an awful lot. They were 10, 15, 20%, because the companies could absorb them. At 60% tariffs out of China, who's going to absorb that? The companies there are not going to, and I don't think the government will. So if you need a good, you'll say, well, get it somewhere else. Not that simple. Think of Rivian. They misordered that copper part. They had to stop all the production because they can't get it right away from anybody to make it that electric engine that they need. So you've got to think this through. I happen to think things you need from China are going to become problematic under Trump. I think he's going to get aggressive if China doesn't change its ways almost instantly. And I don't think he'll just go to 60% tariffs, but I do think it'll ramp up quickly, maybe 20, 25% to show you, hey, I mean business. You didn't do anything over this month or so? Now let's go another 10 or 15. Those are the type of things he's going to do to get people's attention. When you look at Toll Brothers, we just talked on Thursday, mixture here. I was saying if the market keeps going, might make a run to the upper Bollinger Band, but I wouldn't look much beyond that. Bingo today. XHB, I don't think it's making its way up there. I think you got some problems. Interest rates don't look ready to drop to me. I think that creates a problem for the home builders as a group. Toll Brothers is the Cadillac of the group, the Rolls Royce of the group. How much money do you want to spend? They can build that home for you. The vast majority of the others don't do that. That's not their business segment. When you look at XLF, just keeps running. This is, again, latching on to that Bollinger Band, that gorilla glue trade. It's a sign of strength. Will it embed or not is the question. I, for one, would be pulling money off the table in the financial sector here, waiting for pullbacks to deploy again. In XLI, the industrial sector still running. This is all Trump again. But it was more than that. It was pretty good back here, and it didn't look like this point that Trump was doing that well in the polls. It was a horse race. He had fallen way behind. And now, as we see, he took all the swing states. Are you aware that he's 4 seats away now out of the 18 remaining in the House of Representatives to get control of that chamber? Now, he would like to see way more than the 4 seats so he can get some play there, if you will, so he can keep, you never keep everybody on a major vote. You know, can it happen? Yes, but difficult, all right? Although his second term, if you're a Republican and you go against him and you're up for re-election soon, you're going to have a problem. XLE, running the band. So this is that strength. This is that running that part. And gold today, I didn't see this coming, I will be honest. I thought the market would hold better if it went to the Bollinger Band. Been in a downtrend, expected a pullback. Maybe it would get to the 245.84 level, but instead it got through that. I think it'll bounce back towards that Bollinger Band, but clearly there's a problem in Dodge. When you look at Dodge City, that is you look at SLV down to the lower band and the 100-day average, this is where I think support's going to come in. If I were short, this is probably where I'd be telling you to cover the short position. Same in the copper. Doesn't mean they can't go lower. The high probability is that you're not going to just easily get through those numbers and stay there very long. Markets like to bounce away to see what they are. And as you know, I'm the guy saying if China doesn't do more, the silver, the copper are in trouble. I'm not saying that on gold. And the reason is I don't think inflation's going away anytime soon. And obviously traders bailed on gold in front of the Wednesday CPI and Thursday PPI. They must think the numbers are going to show weakness and the Fed can continue to do what the Fed does. Will high interest rates, if those numbers come in high, let's assume higher than the trade's looking for, will that be bullish or bearish gold? That's one thing you got to look at. Maybe gold's enemy are high interest rates and the strong dollar. In BND, you're really caught between the 100-day average and the 18. You've played with it. You got one time deep under it and you came right back and you're still doing that. I want to see the resolution. I was looking when you lost the embedded reading to get to the 18-day average. You did that on Friday, so it hit my target. When I look at UUP, well, you're up and over that Bollinger Band in pretty good ways. We'll see what the market's able to do here, but it's strength city, and that means weakness in FXE, which is exactly what you're getting. So you put it together, you try to come up with the game plan, and it's been an interesting market. You know, I've been happy with the trading. Other than the gold position that I told in the GLD traders, it's been a ball. This has been a rally that's been a lot of fun. And we just gave back something. Get a good rally, might have to clear the deck there and see what to do, let the dust settle. But I think long-term gold's still in great shape. Long-term. Maybe not short term. I cover 40 stock, SPDR, and ETF charts every morning for you. Do it at 9 in the morning. I let the first half hour of trading go by me intentionally. And that's because the aftermarket trade has to settle in the pricing, and that's where that noise comes in. It's right from there that I want to do my recording and bring you up to date. So how do you get this? To see it, all you got to do is go to iraepstein.com research. You can move your cursor to the top up here. It'll take you right to that area. I'm Ira. You have yourself a great day.